Welcome to the Anton Stentner podcast. Today we're talking about should Fannie and Freddie go private or continue to be ran by the government? What should we know, Anton? What are the important data facts? And what is your opinion on this decision?
This is one of those wild ones where we're going to go through the data together. I'm going to also tell you right up front, I am undecided on whether Fannie should stay basically in conservatorship or if they should go private. But what I want you to immediately be thinking about is, what if the reason that you get a 30-year fixed mortgage and house prices are so high today is because of a government bailout that's still happening now? And I want to kind of lay out a roadmap for these two obscure entities. When people talk about them, they don't even know what they're talking about. For Fannie Mae and Freddie Mac and their control of the U.S. housing market, and why they're part of their fate, or what happens next, is starting to determine your financial future, maybe your investments, maybe even the difference between you buying your first home or not owning your first home.
Okay, I've always wanted to ask this question. What's the difference between Fannie and Freddie? Why are they two different entities?
Yeah, so it kind of goes to like this idea of like, who are Fannie and Freddie? When were they created? What do they exist for? So during the Great Depression, really what happened was Fannie Mae was introduced to start creating liquidity and to get us out of the Great Depression. And so basically in 1938, under President Roosevelt's New Deal, to boost the secondary mortgage market and make home loans more accessible. I mean, arguably, you can say, like, with 100% certainty, they did that, they accomplished it. The American or the U.S. housing market is one of the strongest in the world. We have some of the highest liquidity, and we're one of the only places that really has 30-year fixed debt. That's unheard of. See, we take that for granted, but that's because of stuff that was started way back when. And then in 1968, what happened was Housing and Urban Development Act, aka HUD, they split Fannie into two entities. Fannie Mae became Fannie Mae and Ginnie Mae. So Ginnie Mae went for the FHA and the VA loans. Okay. Fannie Mae was then moved over to the conventional loans, and it was authorized to purchase conventional loans in 1970, the same year that Freddie Mac was created. So Freddie Mac was introduced to improve and increase the liquidity in the mortgage market. And what happens is they both serve a core function as a government-sponsored entity. We're going to get more into that, but I need you to be thinking about that. What they essentially do is they purchase mortgages from lenders. They put them into a pool, a bunch of mortgages, which are called mortgage-backed securities, and then they sell that off to investors. What that's done for the U.S. housing market is it's massively increased liquidity. And what's happened here is there's essentially been an implicit government guarantee. What's interesting is when you go read about this, it says in their charters, this is not government guarantees. But the problem is they were created by Congress. And so there's always been this implied guarantee.
Like they're going to back them up no matter what.
Like they're going to back them up no matter
what.
what.
It's their baby. It's like their son, right?
Bingo.
Like no matter what happens, we got you.
And then in the great financial crisis, what did they do? They backed them up no matter what. So not only did they have the implicit guarantee, they then stepped in, took them into conservatorship, and showed the guarantee.
In 2008?
In 2008. And we're going to dig more into that. But I want you to think about our listeners. We try to always bring you the data, our listeners, our subscribers. If you go and look at the Federal Reserve St. Louis website and go look in 1970 and go look at that recession, you can see right after 1970, with the introduction of Fannie Mae and Freddie Mac and them getting into the secondary market and the purchasing of mortgages to increase liquidity, what happens to home prices when you look at that graph?
It looks like it just kept going up and up and up.
It started going up faster than previously and then started rapidly accelerating. In other words, government intervention in the housing market has caused home prices to massively explode. That's that's an underlying fact that I kind of knew, but doing the research, I was like, oh my gosh, you can clearly see this.
So money printing by the government expands the monetary supply and makes everything, including houses, more expensive. Wow.
Dude, it's totally true. Like, it's just,
By the way, I'm joking about that because early in this podcast launch,
yes,
one of the things that was happening is interest rates kind of were all over the place. Jerome Powell was the celebrity everybody was talking about and paying attention. And it was also when inflation was going nuts. And when you boiled it all down, at least during these discussions and just by the experts, there was just one single factor that could almost always be blamed or was not really accounted for in many arguments, but probably is the reality of why there's inflation and just higher prices for homes, and it's monetary supply. Monetary supply is code word for money printing at a higher rate than what is normal, because there is a normal inflation, right? More people, more things are being bought and sold, so you have to have more money supply, and they're trying to keep up with it. It's when they crank it up. And this is what's kind of crazy about this. If you think about this full circle moment, what is just the most expensive thing in life in general? It's always real estate.
Yeah, it's housing.
So, they might have to bail out college loans here soon. Credit card debt is really bad. But at the end of the day, they've done this multiple times. And this is why the monetary supply is so high. And my question is, are they going to do it again?
So, I mean, that's the full debate here is like, President Trump wants to IPO them and bring them public. He wants to create the great American mortgage company. And I want our listeners and our subscribers to understand what that means, what the pros and the cons are as we dig through this. And also know that I'm undecided. So I need you to hit me in the comments with your thoughts on which direction you think we should be going, about what you're seeing here that we may not have gone through today. Because what happened is what you're already alluding to was we had the great financial crisis and we had a government bailout of Fannie and Freddie that was supposed to be temporary. Now it's freaking 15 years later and they're still in conservatorship. They still haven't come out of conservatorship. And so that's why you hear Bill Pulte on Twitter. I think Twitter's his pulpit, by the way. The director of FHFA, saying, hey, we need to get these guys out. We need to get these guys out. One thing that the Republican Party has been very clear about is they want to get government out of people's business. They want to get less government involvement. And this would be a way for less government involvement by simply removing Fannie and Freddie from conservatorship and then driving them public again. The problem is essentially because they have a hybrid structure, right? There's a moral hazard here where the government, they took on additional risk and the creditors probably extended them additional risk knowing the government would bail them out. And so they started taking on additional risk in the early and mid 2000s. Well, what did they do? Normally, they were only taking on the best of the best borrowers. But what happened was during the Clinton and the Bush administration, there was a massive push for increase in homeownership. So both parties are to blame. And what they did was they leaned on Fannie and Freddie during that process and said, relax your criteria. As they relaxed their criteria, Fannie and Freddie started scooting into Alt-A, which is alternative paper, and subprime, which is garbage paper, okay? And what that led to was the implosion that we saw during the great financial crisis in 2008. So they stepped in on September 7th, 2008, and placed them under conservatorship. The Treasury then committed up to $200 billion for each entity. And the crazy part is this bailout saved the housing market and probably saved the globe, because the great financial crisis, we started that here in the United States and we started taking the world out. But then we created some kind of even crazier problems with net worth sweep and then passing this burden onto taxpayers.
So what you're saying is the government indirectly caused the 2008 crash by pumping money into a system that wasn't valid to pump money into?
By leaning on the two government-sponsored entities that had basically an implicit guarantee that they were always going to be taken care of or backstopped by the government if there was a bunch of defaults, by leaning on them to force them into not the best borrowers, aka Alt A and subprime, they stacked more on, and it led to a problem. Duh.
Yeah.
Like
so
that
wouldn't you
clear.
say? Wouldn't you say what the Republicans are trying to do is a good thing? They're trying to put a stop to that bad spending.
Yes and no. You have to understand, like, this is a super complex issue, and we're going to dig into the pros and cons of it. But I want you to understand that I am still 50% yes and 50% no, even after doing this research. I am undecided on whether or not this is the best for the U.S.
Or break it down for us.
Well, so the net worth sweep and the taxpayer debate is kind of crazy. So what happened was there was all these controversial amendments and things that Fannie and Freddie had to go through. So what Fannie and Freddie went through is we had the taxpayer bailout. The taxpayer bailout is estimated between $187.5 billion to $190 billion, and that was the U.S. Treasury taking on senior preferred stock agreements to stabilize the GSEs in 2008. Then what happened right after that is understand that the Treasury, hold on. Right after that, in 2012, we went into what was called the net worth sweep impact. This was a massively controversial amendment where we took those senior preferred stock agreements requiring the GSEs to pay all their profits. So what they did was Fannie and Freddie used to kick out dividends, and they were traded on the open stock market, and they paid out between 10 to 12% in dividends. And then the Treasury just steps in and says, nah, we're going to take all the money. So when they say net worth sweep, all profits started funneling right into the Treasury.
What about all the people that bought treasuries?
That it's not the people that bought treasuries, it's the people who bought Fannie and Freddie stock.
Oh, got it.
Because now you were used to receiving your dividend.
Yeah.
And you don't get your dividend.
So then what would you do?
Well, they sued them. They sued them, and the shareholders won against the net worth sweep $612 million in 2023. But because they called this the FHFAs arbitrary or unreasonable, the execution of the sweep, but there are claims that that doesn't make up for shareholder loss. In other words, the government still profited even after having to pay this out. Then in 2019, this is the closest numbers we have from the CBO. So reportedly by 2019, the Treasury has recouped $250 billion or $250 billion. So the Treasury has actually made money on this. And even though that many taxpayers argue, or many people argue that the taxpayer has been fully repaid, we haven't compensated the taxpayer for the uncompensated value of the government's ongoing implicit guarantee. So in other words, let me explain what I mean. Because the government says, hey, Fannie Freddie, we're going to step in to save you. Well, they don't really say that, but that's implied. And they already did it. That means that the consumer is saving, some estimates are on the low side, they say 6 to 10 basis points, but there are other estimates, which I actually personally agree with more, that say it's between 20 to 40 basis points. That means that the consumer, the U.S. consumer, who gets a loan that is backed by Fannie and Freddie, so they go and get it from Bank of America, and Bank of America sells it to Fannie or Freddie. is saving 0.2 to 0.4% on the interest rate on their mortgage because of this implicit guarantee. And that's a benefit the taxpayer is not receiving, but the taxpayer is funding. They're providing this benefit. So the question then becomes like, if we freaking privatize it, what happens? Do mortgage rates shoot up?
Definitely.
Does it? And I feel the same way. I feel mortgage rates would go up. If they're private companies, do they then change their liquidity in times of a recession or as liquidity starts to dry up? Do they start selecting only the most premium home buyers?
I'm going to predict the great recession and the Great Depression.
Yes.
There's going to be the great snip snap. So they're going to snip Fannie and Freddie, make it private.
Yeah.
And then people are going to complain about, hey, that actually made things way, way worse. And it probably will. And then they're going to snap it back together and be like, hey, government's taking back over free money.
Just kidding. Yeah. So now we've got this debate, like the great American mortgage company. And this, President Trump got on, I think he put this out on Truth Social. He indicated the idea of specifically privatizing them with a potential valuation of around $500 billion or $500 billion, aka $500 billion. So before I go into this, I want your thoughts, Benji, just because you and I have a lot of conversations on this, is like, what do you think are the pros and the cons of privatizing?
Number one, I'd say generally when the government is involved, they're thinking about the well-being and the welfare of everyone.
Yes.
Right? Especially the people that aren't capable, can't afford things, and need assistance. Well, guess what? That usually includes almost everybody except maybe like the top 1% or whatever, okay? Sure. But that's a lot of babysitting. And when you got a babysit, I got 5 kids, that's more resources, right? More food, and in this case, more money. If you privatize it, then it's a proper business, though the entity will say its motto is, hey, we're trying to help people with loans, get them affordable rates, whatever. It still has to be ran like a business.
Yes.
So if not like super profitable, it at least has to exist and not go bankrupt. So you have to start making hard decisions. That's more generally what I think. If the government's doing it, guess what? They've kept printing money to keep things affordable. If you go private, the only thing you can do, I mean, I'm not even a banker and I know this, is you have to raise interest rates. There's nothing else, right? Because the way it works is, I mean, I read a book by Peter Schiff. It's probably the greatest book that anybody that wants to learn about money. And I think it is like how money was created or something, like by Peter Schiff. He's like a well-known investor and you could say economist.
Oh, yeah.
And he says the history of money is really interesting. The reason we have it is because you grew apples and I raised cows, and it was hard to trade, right? Because like you only need part of the cow, and I don't need like a whole like cow's worth of apples. So you create this money, and then you can exchange that money. So you can exchange parts of it.
Yeah.
You needed a place to store that money. Well, then once that money was stored and it was just sitting there, guess what? There's people that didn't want to work to grow apple orchards or raise a cow, but they need the money to jumpstart a business. In comes the first loans. And those people that grew the apples and raised the cow, now with the money that's just sitting because they worked their butts off, can make interest on it.
Yeah.
So if you understand that background, you understand interest rates isn't an evil thing. It's actually a reward for work done and money saved. So why I'm going through this history lesson is if Fannie and Freddie go private, guess what? People are going to invest in it and want to earn interest. And it's not a bad thing. See, they turn interest into a bad thing. So then instead of making it look like compensation for work done, because you can print money, they're like, oh, it should be super cheap. The government's doing that's how we get to 0% loans, right? 1% loans. So my takeaway, it's going to make everything even more unaffordable. I actually think home prices would go down eventually, though.
Yeah.
But also, the housing industry would slow down to like snail pace.
Possibly. And so let's dig through kind of the full pros and cons, so all of our people are on the same page. And as we talk through this, once again, we're trying to deliver the facts, and we may not see all of the playing field. So hit us up with comments and questions as we go through this. So I'm going to break it down into kind of areas of impact. And then we're going to talk about proposal A, which is continued conservatorship, and then proposal B, which is transitioning to fully private, AKA. And then also what's interesting with the fully private is there is still an implicit or even an explicit government backstop. And so if it goes fully private with the way Trump has currently mentioned it, it still has an explicit government backstop. So you don't quite get the government out of housing, which will continue to force that housing prices higher. Second thing I would just semi-argue with you in regards to is even if we had less liquidity, we're still 6 million units behind. So not until supply catches up with that demand. So unless demand was cut in half, prices would still continue to rise throughout the U.S.
Which higher interest rates would.
Higher interest rates could kill off the demand.
Yeah. And isn't inventory slowly creeping up again?
It was creeping up until the last couple of weeks. And then all of a sudden, inventory has started slowing down. That was data from Altos Research and from Housing Wire. They do a really good job of tracking that firsthand. You can see that already curtailing. The second thing that you already see happening, and we told everyone this was happening. That's the funny thing. You get hate comments on especially the shorts, the Instagram reels, and the TikToks. You're so wrong. And I was like, well, I've been looking at this data for 20 plus years. I'm not usually that wrong. And so everyone's like, oh, you're wrong. It's going to be less than 4 million. Oh, existing home sales came out this morning. Guess what? 4.03 or 01 million. It beat last month. Why? Because the consumer is already feeling rates starting to come down. So existing home sales has started rising, and overall active inventory has come down slightly. It's still elevated though. And it won't significantly change until rates get to about 6.25. That will start to fundamentally change it. I'm just telling you the writing on the wall of what we're seeing. And here in the Seattle Metro, dude, we've been having a banging August. Like, we've been selling so many homes. Personally, our team. And then we've been getting deals left and right. Part of it is two things. One, we believe August is the second inning, is an opportunity to go make hay and to win. And we're either working hard or playing hard. The problem is that a lot of real estate agents, what they do in August is they kind of mentally take August off. When I think August is one of those months, just like Gary Vee said, it's the month for hustlers. So we are taking massive opportunity on it. And then, of course, a bunch of our listings have also been selling. All right. Back to privatization versus, keeping them in conservatorship. So one of the, if they stay in conservatorship, we know they're stable. We've got proven stability, we've got liquidity during stress, and we've got consistent flow of mortgage credit. If they go private, then we've got the potential for massive disruption during the transition. Stability contingent upon basically the market or the economy. And the extension of credit is only going to be dependent upon that explicit guarantee and how that's set up. So mortgage rates for home buyers, right now, we maintain consistently low borrowing costs that are lower than the rest of the world, okay, because of this liquidity. But remember, we subsidize it. Well, if we put them as fully private, we're kind of removing part of that implicit guarantee, which could increase, like you were saying, that risk premium and that demand for higher rates, which is then passed on to the borrower. Taxpayer exposure. Well, if they are fully in conservatorship, there's that ongoing, implicit, formalized, contingent liability in the trillions. How much do you think Fannie and Freddie control?
Oh, I don't know. I'm going to guess like $1 trillion.
5.5 trillion.
In debt?
In debt.
That they control. That's not the government debt, right?
Well, it is.
Oh, it is. So that's part of it.
Well, so it's not, okay. It's not part of our government debt.
So it's beyond it.
It's beyond that. So the 37 trillion the government has in debt, we now have 5 trillion plus in implicit debt because of Fannie and Freddie. So add it together, you know, what is that? 36 and 5, 41. You have 41 trillion in debt that they're saying you, the taxpayer, has to take care of. Okay, so now, of course, if we take them private, we reduce that explicit guarantee when then private capital can bear part of this loss. Now, who do you think, though, and this is, okay, I love capitalism. I don't necessarily love this because who's going to benefit the most if they go private? So yes, the American taxpayer gets off the hook a little bit.
Oh, rich people, like really, really rich people with like big, what do you call those? Those big corporate investment firms?
Hedge funds.
Hedge funds, yeah.
So hedge funds, ultra high net worth individuals, and the big banks. So Trump's been talking with JP Morgan, with Bank of America, with all the big boys. And Bill Ackman, you know, famous trader, famous hedge fund manager, major shareholder still, Fannie Freddie, pushing for this. So you have to ask yourself, who's going to really benefit? And this is where I'm at, like a weird 50-50. Like, I love low interest rates because it creates the American dream and helps people build wealth. Conversely, that forces up home prices artificially. Okay, well, then I want to privatize it. Ah, dang it. Well, that means hedge funds and freaking Bill Ackman and the big banks are going to make all the money. Well, there's not really a win here, okay? And this is such a convoluted issue. I don't know if they can untangle it. And I love your snip snap analogy. They may do it and be like, ah, crap, that didn't work, and have to pop it right back. So their public mission is about affordability and liquidity. So if the government's still involved, we've got direct government control, which ensures a focus on affordable housing and helping underserved markets. One of the things people forget about Fannie and Freddie is they do have affordable housing mandates, and they do have things where they have to help on the multifamily side also. Okay, everybody thinks Fannie and Freddie just means single family. They're also multifamily loans. Okay, now if we privatize, then private entities prioritize profit, and they require regulatory mechanism to ensure their actual mission is still fulfilled. So how does a government stay still involved? You see how this is just a murky mess. Private capital and innovation. The problem is if the government's involved, it's going to stay the same. If they're private, you're going to attract new capital, you're going to foster competition. You may see new banks and new models pop up that start taking up this secondary liquidity that eventually could drive the price lower even if it costs more up front. There's a massive government oversight burden here. So you've got extensive and direct management and regulatory oversight by the FHFA. Is that government body needed at the level if these are public? Could you cut that government body and regulation in half? So, that's kind of the pro there. Political viability. This is kind of a really interesting one. So they're stable, but they're criticized on a regular level. And they have ongoing legal challenges because they're still sweeping all the profits right into the Treasury. Well, what's the Treasury doing with that money? And they still have a bunch of longstanding objectives to fulfill. So what happens is there's not enough Democrats, there's not enough Republicans to really push this through. Now, this might be able to happen under the Trump administration, but we don't know. So what's happening with the revenue? We kind of just mentioned it. Well, it's being swept into the Treasury. Well, what happens if they IPO? Well, they could maybe generate like 30 billion plus from an IPO. So what I want you to understand here is that this idea of privatization is super risky. And I don't understand why there's a feeling of a little bit of desperation to do this right now. But the core problem that no one understands and we don't know how to deal with is that implicit guarantee. And then is it going to hurt the housing market? And lastly, what's going to happen to prices? So we've kind of talked about a lot of things here, Benji, and I just want to kind of like recap this and then bring this thing home. We've got kind of this ultimate trade-off that's happening between market efficiencies and housing affordability. And any solution that they come up with is going to be a massive competition between those two goals. Fannie and Freddie are our government-sponsored entities. They grab all the mortgages from the people like Bank of America and JP Morgan, the banks, and the mortgage brokers, and then they pool them together, and then they sell them off as mortgage-backed securities. That's what creates the liquidity. And they were bailed out during the great financial crisis and taken into the conservatorship. And that's where that implicit guarantee was then basically almost exercised by the government. And remember that all the profits right now are going into the Treasury, and this helps with housing affordability on the payment side, but it's probably hurting long-term because of the government intervention and the cheap money, like you were saying, that monetary expansion is artificially forcing up housing prices. And so this is one of those just like really complex financial topics that's really affecting every American and their ability to buy a home, and investors too. And so I just want to finish with, do you think Fannie and Freddie should be privatized? Like, drop it in the comments, let us know your thoughts, and give me some reasoning too about why you think that way. Or should they stay under government control because that's the devil we know? Or should we start moving them back to their GSE and start pulling them out of conservatorship? And the answer for me right now, brother, I don't know. I don't know what the right answer is. All I can say is that it's pretty clear this government intervention has caused housing prices to grow faster than normal.
It's a hot potato game.
Absolutely.
And the potato isn't cooling down. It's just getting hotter and hotter. So as you throw it to somebody else, they're like juggling it even more, but it's not cooling down. It's getting like super crazy hot. And what happens is something that just gets mega hot, like to the sun. It explodes.
It explodes.
I think that's what's going to happen. That this will be maybe the next big trigger that whatever happens here, whether it's directly or indirectly, will be responsible for the next crash.
I
feel like I should.
We need to make bets?
Well, we got something in here. So it's like, what do you call it? I've lost 2 bets so far. So I have to what? Double or no, triple or nothing.
Yeah, you got triple or nothing or double down. Here's where, so once again, I love numbers. I love patterns. The bigger problem that you see today where a bubble is forming is actually AI. AI is forming its own bubble, and you can see this in the CapEx expenditures that are driving the PE ratios even higher. And so you see the tech companies really holding up the S&P 500. This just feels like when I was a kid, I feel like I'm looking at .com all over again. You're looking at Ma Bell all over again. And you can just see this massive expansion happening. And if you don't believe me, just simply go do the research. The numbers are there. That right today is a bigger problem, and then that kind of stock market unwinding a bit than Fannie and Freddie going private, because that would be a hiccup for a moment in time, and then the market would find a new floor,
new base,
a new base, and then I believe secondary liquidity would come in. But once again, I'm 50-50 on this one. Need to do a little more research, and we need to see where these chips fall. We need to see how they would enact this in order for me to make a final decision.